Good morning. You're watching Market Cafe with me, Shreyanshi Singh and Snehi Shah on ET Now. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe. Tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. So, Snehi, first let's take a look at the international handover coming in. What are you looking at?
Well, absolutely, Shreyanshi. Rather flattish moves coming in from the US market, but nothing to worry about. It's Nasdaq that was down 0.4%, so that'll be one counter to watch out for. But stock futures rose slightly in overnight trading on Monday as investors await a key inflation report that could inform the path of the Fed Reserve's monetary policy. Now, futures on the Dow Jones Industrial gained 30 points, less than 0.1%. S&P 500 futures inched up 0.2%. Nasdaq futures as of now in the positive, up 0.4%. But when you look at it on a spot basis, you had Dow Jones up 0.1%, S&P 500 down 0.1%, Nasdaq, like I mentioned earlier, that index was down 0.4%, almost 0.5% downtick coming over there. But well, just a 65-point cut over there, so not much to worry about. We'll see how today's trading session pans out for Wall Street. Now, the uptick in January CPI figure rattled the markets and prompted Fed officials to shift their rhetoric afterward to a more cautious tone about easing policy. And the current market pricing indicates that the Fed won't be cutting interest rates as at its meeting on the 19th and 20th of March, or even the one on April 30th and May 1st. Now, on the back of this, all eyes are going to be on the February reading of the Consumer Price Index, which is set to be released later today. And economists polled by Dow Jones forecast a monthly gain of 0.4% and a 3.1 increase on the headline. Now, the tech-led market rally has lost momentum as of late, as some of the biggest winners this year continue to retreat. Nvidia lost another 2% on Monday after dropping more than 5% on Friday, its largest single-day decline since May of 2023. But let's keep it with the US equities. And JP Morgan chief Jamie Dimon believes that there's a bit of a bubble. He added that the Fed Reserve should wait past June before cutting interest rates. He also said that the US economy was doing well, so it could be almost characterized as a boom, but caution against the wholesale embrace of the soft landing narrative by the markets. So, Shreyanshi, this is largely the handover coming in from the US markets. European markets also not doing much, largely in the red but rather flat. DAX is 0.4% down, CAC 40 0.1% down, Stock 600 though 0.4% down, FTSE the only index in the green, that also nominally. But Shreyanshi, this is the handover coming in. Not much happening, not much excitement, rather flattish moves. But tell us what's happening in the world of oil.
Absolutely. So it's very interesting what is happening with oil and the commentary that we see coming in. Let's take a look at oil prices first. Oil prices were mixed as traders awaited a new round of February inflation data and reports on the global crude outlook from OPEC and the International Energy Agency this week. Now, when you look at the WTI contract, that lost about 0.1%, settled around that $77 a barrel mark, and Brent as well added 0.2%, settled around that $82 a barrel mark. Now, US crude and the global benchmark fell 2.4% and 1.7% respectively last week on tepid demand in China and comments from the IEA that the market should be well supplied this year. Now, most investors are expecting the Fed to start lowering borrowing costs in June. Lower rates typically stimulate economic growth, which also stimulates energy demand. So that is what we're seeing coming in for oil. When you look at gold as well, gold edged up on Monday, trading near its highest ever level after a record rally last week, as traders hunker down for US inflation data that could provide more clarity on the Federal Reserve's interest rate trajectory. Now, OPEC and the IEA will also release their monthly oil market reports on Tuesday and Thursday this week. So that is some key commentary that we're keeping an eye out for, but keeping it with oil then. According to a report published by the Energy Information Agency, US continues to top world production for the 6th straight year. Production in the United States averaged 12.9 million barrels per day in 2023, a level which surpassed the American and global record of 12.3 million barrels per day that the US set in 2019. Now, average monthly US crude oil production also reached a record high in December 2023 at more than 13.3 million barrels per day. So that's the word coming in from that report as well.
Well, absolutely. Absolutely, and with that, let's take a look at all the important events that you need to be keeping on your radar today. Globally, you have the US CPI as well as core CPI coming out, and for India also, that CPI figure will be expected today. Let's shift focus and talk about what's happening in the primary markets. You've got the popular vehicles and services IPO that will be opening for subscription today. RK Swami, that IPO will be making its debut on bourses today, so watch out for that. And other than that, you also have the Bharat Highways InvIT IPO listing. So two IPOs making their debut on D Street today. When we talk about other events, you also have SBI that will be disclosing electoral bond details today. That will be one key event to watch out for as well. So watch out for all of these cues in today's trading session.
Absolutely. And moving on then, US President Joe Biden unveils a $7.3 trillion budget. Biden's budget for the 2025 fiscal year, which starts this October, includes raising the corporate income tax rate to 28%. That is forcing those with wealth of $100 million to pay at least 25% of their income in taxes. Deficit is expected to hit 6.6% of the GDP this year before falling to 3.9% over the next decade. Federal debt is also expected to narrow considerably over the next decade.
Well, in shifting focus to the key macro data that markets will be eyeing later today, the US inflation for the month of February. Now, rising gasoline prices likely put a floor under inflation in February, potentially reinforcing the Fed Reserve decision to take a go-slow approach with interest rate reductions. According to street estimates, prices across a broad spectrum of goods and services have risen 0.4% on the month, just ahead of that January pace for 0.3%. On a year-on-year basis, when indicated, headline inflation is expected to show a 3.1% gain and core inflation a 3.7% increase as well.
On to earnings then. Computer tech giant Oracle shares soared almost 13% in extended trading after delivering better than expected Q4 earnings. Cloud services and license support segment logged a 12% increase in sales. The company attributed the rise to strong demand for its artificial intelligence servers.
Well, and yet another record high for Bitcoin. That was higher by 3%, topping that $72,000 mark. Remember, it was just last week that Bitcoin had hit a new record in volatile trading for the first time since 2021, before more subdued trading took over the weekend.
All right, time for a quick break then, but when we come back, we'll take a look at how the Asian markets are faring.
Hi there, welcome back. You're still watching Market Cafe with us on ET Now. Now, mutual funds deployed more cash in the market in February, adding exposure to sectors like oil and gas and industrials, while reducing exposure to stables. My colleague Somit Sarkar is getting us all of those details. Somit, good morning. Take it away.
Well, if you see in the month of February, mutual funds have deployed close to 26,700 crore rupees, and that is largely on the back of higher number of new fund offers coming in the month of Feb. Now, ex-NFOs, if you see the net flows in the equity market stood at close to 18,000 crore rupees as against 20,780 crore rupees that we had seen in the month of January 2024. Now, for second consecutive month, we have seen mutual funds have been adding or increasing their exposure when it comes to the oil and gas sector and industrial space, and they have been reducing exposure to staples and financials in the month of February. Also, we had seen this in the month of Jan. Now, when it comes to cash level, that has increased on a month-on-month basis to around 4.6% in the month of Feb, as against 4.1%. Again, could be attributed to the new fund offers that we had seen in the month of Feb. Now, if you see stock-specific action, what we see among large caps, HDFC Bank has been seeing a buying action for the second consecutive month. Stock was also down around 4% in the month of Feb. And among sell sides, if you see SBI and Sun Pharma share prices were up anywhere between 11 to 17% in the month of Feb, and mutual funds have used this as an opportunity to partially exit both these counters. NTPC also was one of the selling counters that we have been seeing for the second consecutive month. Now, among mid caps, if you see, Nykaa has been one stock that mutual funds have been buying continuously for the second consecutive month, and it seems that mutual funds have now started to build exposure when it comes to the QSR space. In the month of Jan, Jubilant Foodworks was one of the top buys for mutual fund, and in the month of Feb, we are seeing Devyani International among the top buys for mutual fund. On the sell side, Vodafone Idea, NHPC and SJVN have been top sells for the second consecutive month for mutual funds. And lastly, when it comes to the small cap side, from top sell, Indian Energy Exchange, that is IEX, has become a top buy in the month of Feb. And while among sell side, if you see, it is South Indian Bank, Engineers India, which continue to remain among the top sells for the second consecutive month for mutual funds.
All right, Swami, thank you so much for all of those details. But the IPO of Popular Vehicles and Services will also open for subscription today. So while you're with us, tell us a little more about this particular IPO.
Well, the IPO will be opening today. The price band is 280 to 295 rupees. Issue size is close to 602, of which 250 crore rupees will be a fresh issue which the company will be deploying towards debt repayment. The remaining 352 crore is an offer for sale by the promoters and an investor. Now, the company operates in 4 different segments. It's passenger vehicle, commercial vehicle, electric three-wheeler, and also in two-wheeler dealerships. Currently, if you see, 77% of the revenue of the company comes from top 3 players, that is Maruti Suzuki, Tata Motors and Honda, and nearly 97% of the revenue comes from 3 states, that is Kerala, Tamil Nadu and Karnataka. Now, going forward, management's key focus will remain when it comes to the service business segment, because this segment contributes only 14% to the top line but nearly 57% to the company's EBITDA. Now, the dealership for leading car maker and truck maker is a unique for Popular, but given the higher dependence when it comes to slow car growth state, that is Kerala, is kind of a concern among the street. Now, on the peer side, if you see, Landmark Cars is the only listed player that we have currently, and if you see, our company's revenue growth has been much better compared to Landmark, but when it comes to the EBITDA and net profit growth, the Popular has been lagging Landmark. In fact, Landmark's net profit growth is nearly 77% CAGR for the last for 3 years, and that for Popular is just 37%. Lastly, on the valuation side, if you see, Landmark's rich valuation stands at close to 49 times as compared to Popular's valuation of 26 times. This looks attractive, but do remember that Popular has reported a slower profit growth, and the lower valuation could be one of the reason behind this slower profit growth as compared to Landmark.
All right, Swami, thanks for taking us through that IPO opening for subscription today. Let's get a move on then. And ahead of the 3-day mega startup Mahakumbh event, ET now caught up with DPIIT Secretary Rajesh Kumar Singh to understand what this event means for the startup ecosystem. He also spoke about the EFTA deal, Tesla's entry into India and fintech. So listen into that conversation with ET now Sumit Chaturvedi.
FDI per se is something that will go up and down depending on geopolitical factors, macroeconomic factors in other countries. Right now, the issue is a combination of geopolitical risk because of instability at due to 2 ongoing conflicts. Also, there is a sticky inflation in the developed countries, which has led to fairly high interest rates in many of these countries, as a result of which some of the FDI outflows have been affected. But what we are intent to do is to ensure that the trend rate of increase in FDI into India, as you know, almost 65% of FDI that has cumulatively come to India since independence, 65% of it has come only in the last 9 years. So, our intention is to keep up our focus on ease of doing business, on further relaxing FDI, of which an example you saw very recently when we created a more enhanced, more liberalized FDI sectoral ceilings for the space sector. So, that focus on reforms and EODB, along with of course our investments in our logistics space and our infrastructure space, will continue, and we feel that will continue to make India one of the most attractive FDI destinations in the world.
Moving on then, the Union Home Ministry has announced the implementation of the Citizenship Amendment Act, or CAA. Remember, the implementation of the CAA had sparked controversy and faced opposition as well from various quarters since its enactment in December 2019. Critics have raised concerns about the discriminatory nature of the law and its potential impact on the secular fabric of the nation. The opposition hit out at the Modi government for notifying the law on the eve of the Lok Sabha polls. States like Bengal and Kerala have refused to implement the law. Prakash Priyadarshi has more details. Prakash?
It's a very significant development coming in at this point of time, as the government of India has notified Citizenship Amendment Act, commonly known as CAA. After 4 years, it was approved by the parliament. A very significant development coming in, as it will have a huge political significance as well, as the government has decided to notify CAA just ahead of the parliamentary elections. In next few days, Election Commission of India is going to announce the dates for the parliamentary election, and just ahead of that, Modi government has decided to issue notification which is with regard to CAA. Along with that, it is already pouring in a huge, political reactions from the opposition camps. In fact, West Bengal Chief Minister Mamata Banerjee has on record announced that it is going to oppose the implementation of CAA in the state of Bengal, and it will not allow discrimination in any kind, in the context of citizenship or on the basis of religion. As per the notification, 6 minority community, excluding Muslim, will get citizenship in the country. It will pave the way to provide them all the basic amenities as well. Since CAA has been integral part of the BJP's manifesto, and today government has decided to announce it. So yet another fulfillment of BJP's manifesto agenda, and that will have a very important significance going forward in the parliamentary elections. The minority community in the countries like Afghanistan, Pakistan and Bangladesh will get citizenship in the country.
All right, that's an important update that trickled in yesterday. Thanks, Prakash, for all of those details. We'll be taking you through more as and when we get more details as well. But with that, it's time to slip into a short break. We'll be right back with more news and updates. And let's talk about a stock that is going to be in focus today, and that is going to be Aditya Birla Capital, because that company has gone ahead and the board has approved the amalgamation of its finance arm into the business as well. So what's the rationale behind this and why is this merger happening? Let's understand. And the merged entity will operate as a unified NBFC, and the merger, however, is still subject to the approval from the NCLT, RBI as well as SEBI. Now, what's the vision? What's the rationale behind this mega merger? Lots of key points coming in over here. They say that the new NBFC will have better access to capital. Operational synergy will be positive. It will create enhanced value creation as well. And there will be simplification of structure. There will be reduction of legal and regulatory compliances, ensuring the ongoing compliance with the scale-based regulations applicable to NBFCs as notified by the RBI as well. So, well, that's the rationale behind the merger. And Aditya Birla Finance is the first among NBFCs to set a clear path for compliance. And when you take a look at the total assets of both of these companies individually, right? Aditya Birla Finance, on a 9-month year-to-date basis, you have total assets crossing 1 lakh crore rupees as well. On the other hand, you have Aditya Birla Capital, whose total assets on a 9-month FY24 basis are just at 13,495 crores. So, well, it's going to be a big merger with the wholly owned subsidiary, bringing in more positive synergies for this company. And when we talk about what the Aditya Birla Finance offers, it offers end-to-end lending, financing and distributing of financial products. And these products include the products like mutual funds, insurance and the likes of that. Aditya Birla Finance also caters to retail, HNIs, ultra HNIs, MSMEs, SMEs as well as corporates. And what's important to notice, the amalgamated company would be engaged into the lending business, which is the NBFC business of the erstwhile amalgamated company, and the housing finance business through the 100% subsidiary, and also various non-lending financial services and ancillary businesses directly and indirectly through its subsidiaries or associates. Well, a mega merger coming in, and we'll keep you posted with as and when we know more about this as well.
Well, mega merger indeed, but let's get a move on then. Lloyd Metals conducted its management meet. The company is confident of environment clearance by 2024 end. Ashesha is standing by with more details. Ashesha.
Well, yes, Equities met with the management of Lloyd's Capital, and on the back of that, they've laid out some ambitious capex and expansion plans over the next few years. First up, they've spoken about receiving environmental clearance for their 55 MTPA iron ore mining capacity by 2024 end. They also say that they intend to increase their capacity substantially over the next 2 years. So, management expects iron ore production to increase from 10 MT in FY24 to about 25 MT in FY26. They also aim to increase their sponge iron capacity by FY26. They've announced a total capex of about 32,500 crores over the period FY23 to 26. And as far as margin expansion is concerned, they are positive over there as well. They say they anticipate significant margin improvement over the next 2 to 3 year period. Lower duty structure and improving share of value-added products, or VAP as it is called as, will also aid margin expansion for the company from here on. So they've upgraded Lloyd Metals to long from their earlier ad rating, and they've given a target price of 800. The stock currently trades at 573 rupees per share. So very positive commentary that has come in from the management with respect to margin expansion, with respect to capacity expansion plans. The stock is in focus in the back of this news flow. Alright, well, Ashesha, thanks so much for taking us through that. And Citi conducted its India Investor Conference, and what are the key takeaways from this? What all happened and what are the highlights? My colleague Gaurav is joining in with all of those details. Good morning, Gaurav. Take it away.
Well, yes. So first, let's talk about the paint companies that Citi initiated, and let's talk about Asian Paints, where they have maintained outperform rating with a target price of 400 rupees. Whereas for Kansai Nerolac and Berger Paints, they have kept the rating unchanged, but they have cut the target price. So for Kansai Nerolac, they have cut the target price to 320 rupees per share. For Berger Paints, they have cut the target price to 490 rupees per share. So what they believe is that Asian Paints' recent price cut was actually in line with the strategy that we have seen historically, also to keep the gross margins intact. But when we talk about Grasim's paint launch, they believe that this is not going to hurt Asian Paints at a margin at a very high level. They believe that from their channel checks, they believe that the Grasim's product price is going to be 7 to 9% at a discount to the Asian Paints current product price, and this is going to be similar in trend, in line with what we have seen for Kansai Nerolac and Berger Paints, and that is why they are actually cutting down the EPS estimates for both these companies, where we have seen a price cut from Macquarie. Let's also talk about Nuvama and HDFC AMC, because Citibank has now initiated a pairs trade where they are going overweight on Nuvama and underweight on HDFC AMC. So they believe that the divergence for both these companies is going to stay on a quarter-on-quarter basis in terms of revenues as well as in terms of the AUM growth. So they believe that HDFC's AUM growth is going to lag a little because of the AUM slab change that we have seen in November 23. Apart from that, Nuvama is going to benefit from more market tailwinds, like for example, robust flows in the UNI, HNI wealth category, momentum in the net fund raise that the AMC has seen, and lastly, cost efficiencies have also improved for Nuvama AMC. And if we also look at the share price, Nuvama is trading at 45% steep discount to HDFC AMC, which is going to be a key catalyst for this pairs trade according to Citi. And lastly, they believe that the convergence is going to happen, but for now they are going overweight on Nuvama and underweight on HDFC AMC. So definitely worth keeping an eye on these companies as well.
Alright, thanks Gaurav for that update. But with that, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. You don't go anywhere, because the market takes all of the action forward.
Paytm